Thank you, Simon. Hello, everyone. So my name is Artif Butt, and I'm the Senior Accountant at Hutchings Accountants, where we've been specialising in pharmacy accounting for over 30 years. As Simon said, you can leave your questions through the Q&A at the bottom of the screen, and you should also be able to access some handouts there. Now, today we're going to be talking about how you can save time and money on your pharmacy's bookkeeping and accountancy costs by having an accounting system that's right for your business. We'll look at some of the benefits of going digital and how this can help to streamline your operation. We'll discuss how the right accounting and bookkeeping systems can provide pharmacists with valuable insights into their business and bring opportunities for owners to increase both the profitability and ultimately the value of their business. We'll also talk about some of the common issues and pitfalls that we know a lot of pharmacy operators experience, and we'll go through some tips on what you can do to avoid them. So the first question is, do you have the right financial systems in place at your pharmacy? Pharmacy is a specialised sector that benefits from a specialist approach. As experts in this field here at Hutchings Accountants, we know firsthand that more efficient systems can help you to reduce your own, your bookkeepers and your accountants' time on compliance. Time saved is money saved, but the benefits to pharmacy owners are exponential because they can direct this towards providing more services and growing the business. This is particularly relevant at the moment with all the changes brought about by the COVID pandemic, including high uptakes of flu vaccinations and all the added paperwork this involves. Going digital and automating your accounting systems can also help you to get a handle on your figures and better understand the profitability of the business and where this can be improved, so that you can make the best use of your time and see higher earnings in the short term and higher goodwill values when you come to sell in the long term. Understanding your business finances better will in turn help you to make better financial decisions and ensure that you're prepared for the future. One of the most frequent problems we see is business owners having the wrong data. We've looked at hundreds of pharmacies' financial data over the years, and the number of mistakes and incorrect information we see is quite staggering. So tip one is make sure you have the right accounting system in place. Now, every business needs an accounting system so that it can record its activities and financial results and meet its legal responsibility to regularly report to HMRC and pay any taxes as they become due. This includes accounting for corporation tax, VAT, and payroll taxes for staff. And it's your responsibility as the business owner to make sure this information is as accurate as possible. Under HMRC's Making Tax Digital rules from April 2021, all UK VAT registered businesses are required to keep digital records using a computerised bookkeeping system. So the starting point for any accounting system is that it can help you meet these compliance requirements by capturing the information that needs to be reported. A good accounting system should be a computerised bookkeeping system that's been set up by an accountant and customised for your business, and with data input by somebody suitably trained. It's important to get this right, as there's no point in having a system which contains incorrect data. We've looked at hundreds of pharmacies' financial data over the years and seen a number of mistakes. So following these three rules will massively reduce the scope for errors and improve the accuracy of your records. We recommend using a cloud-based accounting package, as this will be fully compliant with HMRC's new MTD rules, as well as bringing a host of other benefits. Going digital means you can streamline your accounting processes as your data is held online, so you can get a clear view of your finances anytime, any place, and run your business from work, home, or on your mobile. It also makes it much easier to work collaboratively with your staff and accountants, as everyone can access the same data wherever they are, as long as there's an internet connection. As your accounts are totally online, there's no software to install and everything is backed up automatically. Updates are free and instantly available, and upfront accounting costs are eliminated. Upgrades, maintenance, system administration costs and server failures are no longer an issue. Also, as documents can be directly uploaded onto the system, you'll be able to massively cut down on the amount of paperwork you need to file and store. The software can be linked up to your business bank account via a data feed so that all bank transactions are automatically captured by the system on a daily basis and can be categorized as you go. You can also use your mobile phone to photograph invoices and receipts and upload them to the software directly, and it can even suggest how to best match and code the transactions. But what other benefits can you get from having the right system in place, and how can you customize it to really help your community pharmacy business? Choosing the right accounting system and having it set up correctly can make your bookkeeping easier and help you provide more up-to-date management information, which brings us to our second tip. Tip 2 is check and understand your results throughout the year. Of course, in order to run a business, it's essential to know how much tax you need to pay and when, but a good accounting system can do a lot more than just meeting your compliance requirements. The need to report throughout the year means you'll always have up-to-date management information so you can review your pharmacy's business performance on an ongoing basis together with your accountant instead of only ever looking at it once a year, and that too usually months after the financial year has ended. Looking at your data regularly allows you to keep a lookout for any warning signs and put in a plan in place to deal with any issues before they escalate. Management reports can help you look at key performance indicators for your business over time, so you can target and monitor areas for improvement. The main reports you should be looking at to understand your business performance are the profit and loss report, the balance sheet, the aged debtors and creditors reports, cash flow forecasts. Now, we'll run through the first two of these in more detail and look at some examples to explain what to look out for and some of the things they can tell us. The profit and loss report, also known as the income statement, is a report that shows your total income and expenses in a specified period of time. We can see an example P&L report here for Lucky Star Pharmacy, which is a limited company. The first section is the turnover, the income the business has earned in the period. Next is the cost of sales or costs of goods sold, which are the day-to-day running costs that relate directly to the sales the business makes. In the case of pharmacy, this would primarily be made up of the cost of drugs and product supplies. It should also include supplier rebates, but excludes staff wages and locum costs. Turnover less cost of sales gives us the gross profit for the business. If you divide the gross profit by the turnover and multiply that by 100, you get the gross profit margin, which is expressed as a percentage. This is a very important metric as it allows us to look at how profitable the business's core activities are and compare them to other pharmacies, and we'll talk more about this later. Overheads are the day-to-day running costs of a business that do not directly relate to its individual sales, and these are also known as administrative expenses because they're costs that relate to the administration of the business. They would typically include premises costs, staff costs, professional fees, and other general expenses. As I said earlier, one of the frequent mistakes we see is incorrect data in the accounts. One of the ways that you can minimize this is by checking your profit and loss report by expense category to see if there's anything that doesn't look right in the monthly totals. Looking for exceptions in this way means you should be able to spot major errors. For example, if there's no salary shown in a particular month or your cleaning costs are too high. Another common problem we see is pharmacy owners not learning from mistakes. Now, however hard we try to get things right, mistakes are always possible for a variety of reasons. The important thing is that as well as identifying and correcting them, we also need to learn from them and put systems and processes in place that minimize the chances of us making the same mistake twice. An important point to note about the profit and loss report is that income and costs are always included in it on the basis of when work was done and when goods and services have been used, and not on the basis of when money was received in or paid out. This is a very important point to understand when looking at your profit and loss report, because although your business may have made a big profit in a particular period, it won't necessarily have the money available in its bank account at the same time. It's very important to understand the difference between a business's profit and its cash flow. And this is another common problem we see with some of our pharmacy's clients. This is where the balance sheet comes in, also sometimes known as the statement of financial position. A balance sheet is a report that shows how much a business owns and owes as at a given point in time. It sums up all of a business's assets, fixed and current, and then subtracts all its liabilities, current and long-term, from that total. Fixed assets are those that you expect to be useful to your business over a long period of time and typically cost more than your usual day-to-day running costs. This would include any business property, shop fittings, equipment, and vehicles owned by the company. A current asset is something your business owns that's expected to turn into cash within 12 months. This would include money in the business bank accounts, payments due from the NHS and other customers, and any VAT refunds due to be received by the company. A current liability is money that your business owes, which it will have to pay within a year. This would usually include money owed to suppliers, HMRC, and any short-term loans the company has taken. A long-term liability is anything the company needs to repay after more than a year. If you take your current liabilities away from your current assets, you're left with the working capital of the business, which is known as the net current assets. This is the money and resources required by the business to fund its day-to-day trading operations. The assets minus all the liabilities equals the net assets or liabilities of the business and represents what your business would be left with if it collected in everything it was owed and paid out everything it owes. If the total is a negative number, the business owes more than it has the resources to pay and would be considered insolvent. The last part of the balance sheet is the capital section, and this shows the company's share capital and the retained earnings or historic profits after accounting for taxes and dividends. Essentially, this is the profit available to be distributed to the business owners at any given time. You can see that the net asset figure exactly matches the total of the capital accounts, and this will always be the case with the balance sheet, because if the business was to sell all of its assets and pay all of its debts, the money left would be what's available for distribution. Looking at and understanding the right reports can provide you with a wealth of information, such as how your profitability is changing over time, how much you can draw from the business profits, and any warning signs that your business is in trouble. Now, our next tip, tip 3, is to customize your accounting system so that it works for your business. You will need to decide what the important areas to look at for your business are and how regularly to monitor them. This could include looking at your profitability, specific categories of sales and expenses, the performance of different departments or branches within your business, or the cash flow of your company. It's important to identify the key areas to look at that are relevant to improving your business so that you can manage the time and cost requirements of your accounting processes. Once you've decided on the areas you want to look at and compare, you can tailor the chart of accounts in your accounting system, which determines how income and expense items are categorized. For example, if you wanted to track your over-the-counter revenue to help with purchasing decisions, you can break out your sales into product lines so that you can compare different categories of over-the-counter sales to monitor their relative performance over time. You can also categorize your expenses in as much detail as you need. If you have different branches or departments within your business, you can set these up in your system so that you can compare their performance in your management reports, which can also be customized to highlight the key areas you want to focus on. Tip 4 is know what your pharmacy is worth and how it compares to others. Our next tip is to get an informal valuation of your pharmacy so that you can identify the main factors affecting its value and compare your results to other pharmacies. If you work with an accountant who specialises in pharmacy, they'll be able to help with this. This comparison process is called benchmarking and is very useful as it helps us see how a business is performing relative to others in the market and can provide helpful insights about things we're getting right or wrong. Two of the areas which are likely to have the biggest impact on your business value are the gross profit margin and your staffing costs. So we'll look at these in more detail. So we talked earlier about gross profit and how it's calculated. In any pharmacy valuation, gross profit and your buying is the single biggest factor that determines the price you'll receive. And a relatively small improvement here can make a very big difference to the price you'd eventually walk away with. So we looked at the formula previously for calculating gross profit margin, which you get by dividing the gross profit by the turnover and multiplying it by 100 to express it as a percentage. In order to benchmark your pharmacy against other pharmacies, you need to compare like with like. So it's important that your gross profit is calculated in the same way. The turnover figure you use should consist of pharmacy business income only and shouldn't include other sources of income such as rental or investment income. Your cost of sales should not include things like locum costs, stock taking fees or other sundry costs, but should include any supplier rebates. Once you know your gross profit margin figure, you can see how it compares with other pharmacies to see how your pharmacy is performing by industry standards. In general, we'd expect to see a gross profit margin for independents of between 32 to 34%, although this may need to be adjusted for things like location, size, and trading hours. Recent years have seen some challenging times and difficult changes for the UK pharmacy sector that have led to falling gross profit margins, although in the last year we've seen these start to recover somewhat. As we can see here in figures from across the UK, margins fell in 2019, stabilised in 2020, and so far in 2021 have gone up slightly. If your margin is falling below the average, it may be time to have a serious review of your stock control and purchasing methods with a view to improving the margin. Now, another very important area is staffing costs. This is usually the largest business cost for pharmacy owners after stock, so it's important to get this cost at the right level to optimise your profitability and value. And we look at this as a percentage of turnover by calculating the staff cost to sales ratio, which is staff cost divided by turnover and multiplied by 100. We'd usually expect to see staff costs at around 14 to 16% of turnover. The figure should include staff salaries, pension costs and national insurance, and also pharmacist costs, which should be at the market rate. So you may need to make an adjustment if the owners are pharmacists working in the business but taking a relatively low salary. This is so you can look at the total staffing costs to run the business if it was to be sold to new owners. Focusing on getting your staffing costs right can have a significant impact. Looking at the bigger picture, I think one of the most serious problems that we see with our pharmacy clients that can have the most extreme financial implications is not looking ahead and planning. If you're just reacting to events instead of anticipating them and being prepared, you can find yourself in a much more difficult position than you would have been in otherwise. So tip 5 is plan for improvement. Looking at the current value of your business and benchmarking against similar businesses can also help in creating a structured plan for improvement. Using the initial valuation, we identify the key areas affecting the profitability and value and look at how these can be improved. Then we map out a list of prioritized targets we want the business to achieve and a timeline over which we want to achieve them. The targets can include things like reducing stock holding and wastage, improving the business gross profit margin, reducing staff costs, and reducing overheads. You should be able to work with your accountant to decide which areas are especially relevant for your business. We then use customized management reports to analyse and monitor the business performance periodically and ensure the business is on track to meet the targets for improvement. These management reports also help us look at how the potential market value of the business is changing as time progresses based on the most recent performance, so we can verify whether the numbers are moving in the right direction. At regular intervals, we review the results and re-evaluate our plan where necessary. The aim of this process is to increase the profitability and value of the pharmacy as much as possible. Our final tip is think about the future. Any journey has a destination, and it's very important to think about what your eventual plan will be for the business. Will you be passing it on to your children or family members when the time comes, or do you plan to sell it to fund your retirement? Of course, it's impossible to predict what will happen, and the best laid plans can change over time, but having an idea of what you want to do with the business will allow you to look ahead and be best prepared. If you are thinking of selling in the future, you should be speaking to an accountant that understands pharmacy several years before you plan to sell. They can give you a qualified opinion on what the business is worth, identify any issues that may be adversely affecting value, and advise you on any tax or accounting issues that may require attention. With their experience in pharmacy, tax, and accountancy, they can give you valuable pointers around your business structure and pick up on tax considerations that could save you tens, if not hundreds of thousands of pounds in tax when the time does come. Having this conversation several years in advance will give you the time and opportunity to implement any strategic changes that could help you improve value, saleability, and your tax position. Thank you very much for listening to our presentation. That's all for me from now. I hope you found that interesting and informative. I believe we have not been able to get any questions through at the moment, but if you do have any questions, by all means do send them to us, and you'll have our contact details in the handouts, and we'll be happy to respond to each of them individually. Oh, I can see we have suddenly got a couple of questions that have come through. We've got a question number one, which is, which software do you recommend? Now, there are a number of softwares on the market that are quite good. They do have advantages and disadvantages. So we do work with software such as Sage, QuickBooks. We work a lot with Xero. I think in terms of recommendation, it would probably be based a bit more on how you wanted to use the system in terms of getting the right balance of functionality and cost, because there would be some differences there. I have seen another question come through on a related note to say Sage or Xero, which is easier? And I would say the answer to that is, if you do use Sage, you will find Sage easier. If you use Xero, you will find Xero easier. If you've not used the system before, you'll probably find Xero easier because it is more intuitive and a bit more user-friendly. So I hope that answers the question. We have also had another question about the handouts. Now, I believe you should be able to access the handouts at the bottom. And I think there is also a message in the chat to say you can access and download the 3 handouts to complement tonight's event. If there is any problem there, then we can arrange to have those sent to you afterwards.
Art, if I can re-upload them, if that helps. Yeah, you should be able to find them in the chat. They're just above where I sent that message. Hopefully our audience members can just click on those and you can download them directly. But I'll do them again quickly now, just to make sure that everybody can access those.
That's excellent.
Okay, give me a moment just to do those. That's the first one. Okay. Number 2. Do you want to, Atif, quickly say what they are, the handouts, just while I'm doing that?
We should have, I believe what we've got in the handouts, one of them will just be some notes, which are basically the slides that this presentation's been done off. And we've also got one of them is just a bit more information about our company and what we do for pharmacies. And the third one is a bit of information about pharmacy sales and the accounting aspects of them.
Fantastic, thank you. I don't know if our audience member who couldn't access them, we can just double check and make sure you can access those.
Yeah, hopefully they're all there. Excellent. Well, thank you everyone again. Thank you, Simon, for your help. Thank you everyone who's joined us today and listened in. And that will be all from us.
Thank you so much, Atif. Thanks for your time. Good night, everybody.
Good night, all.